Bitcoin continuing to put in monstrous moves. It's bananas. It's bananas. 7 months up straight without a pullback. It is looking extremely strong. So you know what? In this video, because the risk is getting so high, let's have a look at a few things. At first, like I've used a ton of indicators over the years, from high-priced premium indicators like Lux Algo, Market Cipher, and a few others to free indicators such as Simple Moving Average, Exponential Moving Average, Market Cipher free version, Ichimoku Cloud, Bollinger Bands, Super Trends, Stochastic RSI. I've used a bunch of them. And some are better than others, right? Some are better than others, but none that I've used are 100%. And at best, they are good for helping you identify trends and sticking with that trend. But to also be fair, trends are one of the most important indicators. So in this video, I think I wanna have a look at what tools or indicators or data points that we can use to help identify the top and when might be a good idea to start to sell, because I don't know about you, but I just aim to take a slice out of the middle. Okay, I just want to take a slice out of the middle out of all of the profit. I'm not trying to be a hero and buy the bottom and sell the top and talk about how great I am because I bought the bottom and sold the top. Yeah, that's not what my aim is. So let's have a look at some of the indicators that we can use and that I'm going to monitor going forward. Okay, so Bitcoin on the monthly. One of the first sort of trends or indicators that we can use is time. I'm not going to spend too much time on time because I ain't got much time. But let's have a look at like the bottom to the breakout of the previous cycle. So 2015 here. 2015, we created a low in January the 1st, 2015, right here. Okay, and until we broke out and took out this high of 1,000. Just over $1,000 on Bitcoin, it took us 821 days to break out, right? That's what this figure here is. It took 821 days to break out, which was this bar here. We closed above the all-time high. Okay, 821 days. Cool. Next cycle in December 2018. Okay, we created a low until we broke out of the high of 20,000 of our previous cycle. That took us 701 days. Cool. And this cycle, if we were to close this month above our previous cycle tops, it would have taken 486 days. Cool. What's that showing us? The time is getting shorter. We're breaking out to all new time highs quicker, and the returns on those all-time highs are a lot less. For example, if I grab the top of the previous cycle here, January 2014, that was the top here, 1,000. To the top of the next cycle, that was a gain of 1,600%. Yeah, cool. Let's get the top of the previous cycle up here. The close, we'll get the close. Okay, 13,000. Well, it was 20,000, pretty much $20,000 on certain exchanges. But the it was approximately 377%. Okay, so that's a lot smaller than the previous percentage I mentioned. So it's getting shorter. Okay, so time's getting shorter and the price increase is getting shorter as well. So that's one indication. That's not me making my opinion. That's just the facts and the charts, right? Show me the charts and I'll tell you the news. So that's just the case. That's what's going on. Cool. So an indicator that we can use is the CBBI. And you can get this by going to colintalkscrypto.com. Okay, and what this is an amalgamation of 9 different metrics to help us understand what stage of the Bitcoin bull and bear market cycles we're in. Yeah, I'll explain a bit about this in a sec. It's currently on 81, which is quite high, and it measures these different indicators here. I'm not an expert in any of them, but I have had some experience adding, for example, the MVRV score. I've added this to my trading view before, and it's been a great indicator for helping to identify the bottom. I'm sure some of you are familiar with the Pi cycle top indicator, and I've used a Newport before as well. So it's just 9 different indicators to help you identify which part of the market you're in. Yeah, cool. For an example right here, let me use the Pi Cycle top indicator on TradingView. Yeah, so I'm going to TradingView. Let me switch off my Gann swings. I'm going to use the BLX chart. BLX chart's got the most data. That's all there. Let's remove all of my information here, and I'm gonna add the Pi Cycle top indicator. So if I go to indicators, let's type it in. Pi Cycle top indicator for Bitcoin. Let's see how accurate it was. And the Pi Cycle top indicator has been really accurate in helping to identify when the top comes in. If I go to the daily, it's been pretty good even on the daily. So you can see in 2021, it identified this top. It saw the May top or the April top here as a top rather than this one here. But I mean, none of you would complain if you got out of all of your crypto here. You would have avoided all of this downturn here. Okay, you might not have caught that second win, but that's fine. So it's been pretty accurate. Okay, it caught that. It caught the previous top as well. Okay, it caught the previous top pretty much to the day. Pretty much to the day, it caught that. And it caught that in December of 2017, and I believe the previous cycle it caught the top of as well. Okay, now remember what I said, nothing is 100% accurate. Okay, it did catch that one in 2013, and the Pi Cycle top, it caught it a few days earlier, 4 days earlier from the top. Okay, so Pi Cycle top is a pretty decent indicator. Now you got to be careful with indicators because you don't know when they update them or if they retrofit them to fit what's been done. But you know, an amalgamation of 9 different metrics isn't really bad compared to just listening to somebody on YouTube or having a price target in your head. But it's up to you. It's up to you what you want to use. So this is something that we can use, right? The CBBI. So let's have a look at it in a bit more detail. So yeah, if you scroll down on the page, you get to the chart of Bitcoin down here. And basically what this is the blue line at the bottom here. You can see it's got the numbers. It says CBBI confidence. That's a CBBI really. And then the colored area where the spots are here, that's Bitcoin's price, right? So you can see it's been good to buy Bitcoin down when the CBBI is at the floor. Pretty much anything below 10. 5s are great places to buy, or alternatively anything that's dark green. And it's been a good time to sell when things get red or dark red black or at 90s. Okay, that's what the data tells us. This isn't my opinion, this is just the data. So it's quite interesting. So you might want to consider this. You might want to consider, because in the past, when it's gotten to like 90s in the 90s, that's been a great time to sell. It's been an absolute great time to sell. Where are we at the moment? We're at 81. All right, in the previous cycle, where were we when it was 81? Okay, Bitcoin around 81. I might not be able to get a spot on here. There we go. Bitcoin was 29K. And of course, we ran all the way up. We had to push up to like 86 before Bitcoin came in for a correction. And the 90s was the great place to sell because you would have been selling Bitcoin around 50K and 61K. It would have been a great time to sell. Okay, so that's just to keep that in the back of your toolbox. All right, so keep the coin, colintalkscrypto.com. Go to that website and keep track of the CBBI. Okay, and now another thing I want to mention is the fact that, you know, you can be really gassed by certain people out there, 100%. And to be honest with you, they know a lot more than I do. When we was buying Bitcoin all up here, well, I wasn't buying Bitcoin, I was buying crypto, buying a lot of different crypto assets. I didn't really buy Bitcoin. I was listening to a lot of people saying Bitcoin's going to go to 120,000 and such, and then we had this big drop, and this was a drop from like 65k all the way down to 28k, and that was hurtful. It doesn't look like much now, but that time was hurtful, and it was over a period of 3 months. It was from like April to May. That was horrible, and I was listening to a lot of people, and then we broke out here, and I remember at the bottom here, actually, I remember BitBoy talking about, you know, we're going to go back up, I've got some insider information, and we then did break up, which was absolutely fantastic. You know, I really believed in BitBoy at that particular time because all other influencers were saying we're heading back down, but BitBoy was the only channel that said we were going back up, and then everyone jumped on his bandwagon. He was right, his viewership went up, it was bonkers, he was right. And And then we came up here, and when we came up here, I think Plan B's stock to flow model was predicting 90,000 Bitcoin on this month or something to that effect. So everyone was expecting at least 90,000, but I was hearing like 250,000, 300,000 easily, and we didn't get there, right? So you need to be careful who you sort of listen to. And some of these people are remarkable people, right? You know, Cathie Wood's got a $1 million prediction by 2030. And I believe yesterday she moved this back and said, I need to revise this, and I think it's going to happen earlier than expected. And, you know, things like this have an impact on us. It has an impact on me, that's for sure. It makes me not want to sell Bitcoin at all. But I just got to remember to be careful when you're listening to these people. But, I mean, don't get me wrong. She's a multi-millionaire. But also the fact that she makes money from selling Bitcoin. So it's just to be aware of that. Elon Musk in his tweet here, you know, he made this tweet back in 2021, and he was stating that, you know, his gut feeling was that there was going to be a recession in 2022 but not later than 2023. And you can look at the charts here, you know, spring summer 2022 was around here, and he's calling the bottom. He blatantly called the bottom. The most richest, or one of the richest men, access to tons of resources, is saying we're going to have a recession here, and we didn't. So you need to be careful. So this is why I'm saying at least have some indicators in your belt, in your toolbox, that you use to help sell or when not to buy. Remember, you know, you need to find out what your aim is. But my aim is just to take a chunk out of the middle. I'm not trying to be a hero. So it's just to sort of remember that. But anyway, now for my trading, I like to use the Gann swings and the zigzags, volume, and RSI. Yeah, that's my go-to because it's just worked for me really well, and it works. It worked wonders for me in the bear market because I was buying very low in the bear market and no one was around back then. So it's done really good for the bear market. I don't think it's done as well for me in this bull market, in this sort of parabolic stages, to be honest with you. And that might be testament to me that you need to change your strategy when we enter a bull market, because while my strategy worked for predicting the lows and buying around these lows, it hasn't been great in terms of, or it hasn't been the most effective in getting the most value in the bull market. But you know, this is a marathon, not a race, so we never know what happens when if you know, this price could crash in the next month and the next month below, and nobody sells, and while I've been taking some profits, then you know, it shows that I've been pretty successful. But anyway, these are the tools that I like to use, right? And it's pretty simple. All I'm doing is looking at the swing highs and the swing lows. So this pink bar here, all right, and that's what we're kind of following, really. And if you was to just for example, with this strategy, if I grab the top here, I like to use the boxes. I use the top, you know, and grab the wicks. So I can see this wick here on the monthly and the top of that wick, and I've just drawn a chart there. You know, you can see that was in 2017. You go forward and look how it was respected somewhat in 2022. And this is why I was able to buy around these zones, because that's what I'm looking for. Okay, I'm looking particularly at swing highs, swing lows, and then the volume on those swing highs and swing lows. That's how I was able to predict these lows here, right? That in addition to time. But you can also use it for things like when we was actually hitting. I wasn't really using TA back then, right? When we came down in this crash here. But this is something you could have used, right? Or I could have used back then. So I'm on a daily chart now, and you can see, like, you can see the swings. You can see the swings. We had the swing. This swing down here in April 2021, that's the first time it broke. Let's get the arrow out. This swing here was the first time it broke this swing and then the previous swing. That's a danger signal here. All right, that's a danger signal. On the way up, we didn't break any of the previous swings. We didn't break that swing. We didn't break that swing. We didn't break that swing. We didn't break this swing or that swing. This swing down here broke both of them. Broke that swing and that swing there. Okay, so that's a danger sign right there. All right, that's a danger sign. We come up, we're not able to take out the previous high. That's the danger sign. We push down, we push all the way down, and we create a low here. Where does the low come out? On this low here. That's why there's significant importance on these swings. And that's what I use to help identify the way I trade. Okay, and then we can see if we follow that line across, we can see that's where we found our support before we went up again. What did we also see on this downswing? Huge volume. Huge volume. If I give you a bit more space here, you can see there's a lot of increased volume on there. There's a lot of stopping power on that swing. All right, this is a significant low. It's a significant low. What do we also have? We also have bullish RSI divergence. Okay, bullish RSI divergence. I'm not too sure if it's the hidden one or just divergence in general, but you know that's what you've got there. You've got a lower high here, and then on the RSI you have a higher low here. All right, lower low, higher low. That's the divergence. That was an indication that this would pump up again. All right, so these are some of the things that you should look at, but it takes a bit of practice to use this, right? And you can use this on the smaller time frames. Getting your RSI, getting your zigzags, volume, and the WD Gann swings, and add that to your chart. Practice with it on an hourly chart or a 4-hourly chart, which would be better, because the higher time frame you go, the more accurate your predictions are. Or that's what I found in my experience. But if you don't want to do all of that, you know, one of the things that you can use is simply like go to your candles. You need to get TradingView. Just get TradingView. TradingView is free. Sign up with a Google account. It's quick. Download it to your phone and just have it there. Change your candles, yeah, and just change it to the Haikin Ashi candles. All right. So this is basically an average. This is taking the average price of a particular bar. All right. Change it to the weekly. Change your bar to the weekly, and it will keep you out. It will keep you out of most trends. All right. It's even more accurate if you put it on the monthly. All right. Let's say you had it on the monthly. Let's say you bought on the close of the month that is green. So if you did that in April 2019, yeah, there's the close right here at 4,692. If you bought that and then you left on the close, you would have made 78%. Cool. 78%. That's nothing. That's good money. What about the next one? All right. If you bought on the open, it went up the next month, but it closed short on that one, you would have lost 12%. All right. Remember I said nothing's 100%. All right. Where would you have gotten after that? You would have gotten on this bar here, right here. May the 20th. The 1st of May 2020. Yeah. You would have bought at 9,300 and you would have rode it all the way to the top until this close here. That's 393%. You could easily use the Haikin Ashi candles and just trade off the Haikin Ashi, trade it on a monthly. But most people don't want to do that because the time length is too much, and there's too much people talking about crypto. It's hard for you to not get gassed. And that goes back to my previous point where we're talking about the Cathie Woods, the BitBoys, the Elon Musks, and all of those people who call in recessions and who have an influence on our minds. And when we talk about it with our friends saying we've made this, we've made that, and you haven't really made it until you've cashed out and put the money in your bank. All right. The fact that you've got it on Binance is a security risk. All right. It's another third party that holds your crypto. You don't own your crypto. All right. This is why I don't necessarily say that I've made that much money, because in my heart, I know that I haven't, because it's not in my bank yet. And, you know, I haven't even paid taxes on it yet. And that's a different story, right? Depending on which region you're in. But yeah, that's something you can use. You can use the Haikin Ashi candles. Again, down here, where would you have entered? On the closing bar of this green one here, yeah? So you would have entered there, and you would have exited your trade on the close of this bar here. That's 37%. 37%. That's great. That's great. For 212 days, that's fantastic. Okay? But most people want to get the 2-3x gains. Trust me, the majority of people that was in money, and all of my friends that was in money up here, we all lost it. We all held. We held. And the majority of those tokens went to zero. Okay? I don't know of anybody who pulled out and said, and kept their money. And kept their money throughout. Some of them that cashed out ended up buying on some of these bars here, thinking that we're going to go up more. The greed is surreal. So you need to have a plan in place. And that's what I intend to do with the indicators I just mentioned. And just logging my thoughts on these videos here, right? It's really important. So yeah, that's that. Where would you have got in here on this bar here? All right, so September. All right, there's our first green bar. There's the close. you would have entered on this bar and you'd be currently up. You'd currently be up 113%. Now you can apply this to any different crypto asset, of course, and you'll be up. And it's easy to say so in the bull market that we're all going up. But more importantly, in the bear market, it would have kept you out. And it would have kept me out when I was doing some of this. I was buying some of these lows here until I sold out and said, okay, I need to reevaluate what my strategy is. Okay? So it's the Haikin Ashi could be really useful in that case. So throw it on. The short time frame you put it to, so for example the weekly, the more inaccurate it gets, and it will get you in and out and in and out and in and out. But you can catch some moves quicker. So the risk curve increases, but so does the rewards, potential rewards. But yeah, good luck everyone. Stay safe. No one went broke taking profits. All of that good stuff. Be careful on the crypto streets out here. We're overheated. Yeah, but we can remain overheated for a long time. So at this stage, I'm banking profits where I can on any of these altcoins that I'm purchasing up. I'm banking on those quick time because we could easily get a sharp pullback. Yeah, stay safe.